Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. Joining us now is someone absolutely brilliant on piecing together Y equals C plus I plus G plus NX. Stephan Stanley joins us from Santander. I looked up on a map where Santander is. It's on the northern shore of Spain, on the Mediterranean. I did not know that. It's like an ancient city. It's like, old Spain. It's not like condominiums, down south of Seville.
A lot of history, yeah.
Have you gone back to the mother country yet, to Madrid?
So I've been to Madrid, yeah, of course. A huge campus there, beautiful.
Okay, great to have you here today. Steve Stanley, which of the letters in the alphabet soup of GDP are you most focused on right now?
I think you have to be focused on the biggest one, which is C. Yeah. Definitely consumption.
Well, what's the dynamic you see right now?
So the consumer was propelled last year by a very strong labor market. So income growth was very strong, and that supported good consumer spending. I think surprised almost everybody on the upside. This year, income growth has slowed as the labor market has cooled, but consumption has continued. So in essence, I would argue consumers are spending a little beyond their means at this point. Savings rate has declined pretty sharply. So I think the consumer is likely to slow down as we move forward, into the fourth quarter and early next year.
So what's your real GDP, nominal GDP view 1 year out?
I think we're going to dip as low as 4% or a little lower for a couple of quarters, and then once nominal, yeah. And once these Fed cuts start to kick in later next year, I think we'll start to creep higher again.
Yeah. Damian, this is important. This is something I'm not hearing from a lot of people. We get under 4%.
Well, Stephen, I'm going to be visiting Spain in Christmas, so I'll inform you on Santander and what it's like.
Appreciate that.
So look, let's talk about.
You and I. Wait a minute. You and I, Steve. We live for SAS Hours itinerary.
Oh, no, stop.
Are you going to spend 5 consecutive days at home?
No, yeah, sure, of course. I love to spend time at home. I mean, but let's get off that. Stephen, I have to ask you, I'm reading your latest note, 10 FOMC meetings between now and the end of next year. The median dot is only 150 basis points below where we are currently. Yep. What does that mean? Half of those meetings, they're only cutting by 25? I mean, what does that mean to you?
I think that the idea here, it seems like with this 50 basis point cut, is let's rush at the beginning, get closer to where we think we should be, and then we can slow down as we go forward. Remember, it wasn't so long ago that the dots, as well as the consensus forecasts amongst private economists, had the Fed going just 25 at every other meeting and doing that basically until they got down to 3%ish.
Right.
I think now it feels like we're going to have fast at the beginning, and then we're going to probably devolve back to that by sometime next year.
So does that mean a higher terminal rate in your view, or do you think that we could still see 3%?
No, I think it's between, in my view, neutrals between 3 and 3.5. I think we end the cycle a little above 3, but in that general neighborhood. So they had a little over 200 basis points to go. They just bit off 50 in one bite.
Is the effect to our listeners and viewers linear with those rate cuts, or is there convexity, or is it quadratic in that the more they go, the bigger the wallop?
Yeah, I think it depends on what rates we're talking about that are relevant to consumers. I mean, if you're talking about mortgage rates, which are tied really to the long end of the market, that hasn't moved very much since the meeting. So mortgage rates have been coming off already, but they haven't moved further on the back of this 50 basis point move. If you're talking about credit card rates or other rates that are floating, the immediate impact.
What is business going to do here? Damian just mentioned that M&A is really picking up. There's an animal spirit, I guess, to our nominal GDP, but the 11% whatever of the economy, what does business investment do here?
Yeah, I think certainly rate cuts are going to be cheered. I will say in the short run, I suspect that there's going to be at least some businesses that are sitting on their hands until they see the results of the election. So that is potentially a short-term drag. Although, you mentioned M&A, it may very well be that there are people that want to get their deals done before a new administration comes in, hoping that they can get it approved and get it locked away before there's a potential for a change in regime one way or the other that might affect that.
Stephen, in the 12 months after the Fed first cuts rates, commodities tend to perform really, really well. Do you believe this time the same thing's going to happen, or is this time a little bit different?
Every cycle's a little bit different. I think for commodities generally right now, one of the big fundamentals that people are keeping a close eye on is the Chinese economy. So there's a lot of concern about weakness there. They're obviously the biggest demand source for so many industrial commodities.
So you have to pay attention to China still.
Certainly for commodities, absolutely.
Yeah. Let me give you Dr. Wong's thesis here, as she stated last week. Anna Wong looks at 3-month moving average non-farm payrolls, 116,000. That's squishy with revisions. And then she models in the highly debated birth-death model and all the rest of the noise Stephan Stanley, you're expert at. Can you revise down 116 to where this is already a non-farm payrolls report that causes concern?
You can certainly make that assumption. I don't know if you can make it safely. It's not unreasonable, but it's a bit of a risk to extrapolate the downward revisions that we have that go through March of last year forward beyond that. I think it's fair to say that the more than likely the direction of the revisions is negative, but
you don't want to give a magnitude on it.
Pegging a magnitude is
all magnitude.
Yeah, right, exactly.
Yeah.
Well, Stephen, we have a core PCE print coming in on Friday. The market's looking for, I think, 2.6% or 2.7%. I think we were 2.6 last time. But if you look at, quite frankly, 3 and 6 month run rates, they've slowed materially, and the market's pricing in a softer CPI over the next 12 months. What are your views on inflation here in the U.S.? Do you think it stays sticky at current levels?
Yeah, so I think as it relates to inflation, we've had way too much of just extrapolating the last data point. So we had the second half of last year, core inflation was very low, and everybody came into 2024 just assuming that inflation was dead. Then we had 3 or 4 bad numbers to start the year, and oh wait, inflation is going to be 3% forever. Now we've had a couple of more benign readings, and we're ready to declare victory again. And I think the problem is that a lot of that volatility is coming in some of the most noisy categories, things like used car prices and airfares that you can't extrapolate forward. So I think that the reality is somewhere in between what we saw in the first 4 months of the year and what we've seen since then.
Haven't asked this week. We get so many other distractions going on. How about the real world of the inflation report? I believe we see it on Friday as well. Does that have the opportunity to surprise us, or is it a snooze fest?
Well, it's probably a snooze fest, but I'll tell you so the consensus is 0.2 on the core, but we had Governor Waller, who spoke on Friday, and he said that the Fed staff model is telling them that it's going to be 0.14. Now, the difference between 0.14 and 0.16 in reality isn't that much, but it makes a big difference in the markets because all they see is 0.1 or 0.2.
There's a snapshot into the acuity of Stephan Stanley, award-winning on Wall Street, going out to 2 decimal points. It's like an F1 race or something. First place and second place is 0.003 of a second or whatever.
It's like Piastri.
Yeah.
Lando Norris, McLaren,
Lando's
Red Bull,
killing it this week. I watched
Mercedes.
Singapore.
Oh my God, it was so good.
Ricardo
U.S.
was
Grand Prix
tears.
coming up in less than a month. We got Austin, Texas. Are we going?
You're going everywhere else. Why aren't you going to Austin? Steve Stanley, thank you so much for Santander. Our conversation today on being in stocks. John Stoltzfus has been brilliant at Oppenheimer Company, our chief investment strategist. John Stoltzfus, this bull market, how has it changed? What is the character forward?
Well, I think the character that's changed very much, of course, is the Fed made its first cut on its benchmark rate since March of 2020, as I recall, which is a dramatic change. We were expecting 25 bips. They went for 50. And we think that was to accentuate that this is a down payment, is what we've called it. And we're beginning to see others using that term, but we think we were the first. A down payment for Wall Street and Main Street, essentially a message from the Fed. The Fed hike cycle is essentially beginning to end. Here's the first cut.
Damian,
and we think it.
Damian, March of 2020, up 152%. The SPX is up 22% annualized.
Wow. Yeah. No, I mean, John, you have to help me kind of. I'm looking at this week. I'm looking at data on the consumption side. At the end of the week, I'm looking at housing on Wednesday. But, we have a lot of Fed speak. We have Goolsbee, Bostic, Bowman, Kashkari, you name it. I mean, just how focused are you going to be on some of these Fed speakers in the week after the Fed cut?
We certainly will be listening. A lot of our fundamental strategy is based on economic data, not just the view in the rearview mirror, but also what it suggests for going forward and the importance of the opinions within the Federal Reserve. I've been doing this for 41 years now, and I learned early on when Volcker was in his second term that you better understand the Fed and the chair of the Fed if you're going to play in equities or any markets for that matter. But what we'd have to say, Bostic appears to be what we're listening to, and we think this was a reasonable cut, and it had to do with, and the chair has also mentioned it, the Fed is focusing on both of its mandates, and this one has to do with jobs. And the jobs were softening. The beige book, the last beige book showed weakness across the regions. I think that was the response that took it to 50 bips. But we think overall it's good for equities. Smalls and mids might actually begin to see sustainable rallies. Not quite yet if we looked at Friday's performance, but let's see what, generally speaking, it looks better for them.
I mean, Stoltzfus is so old. When he entered the market, Bonnie Tyler was on top of Billboard with Total Eclipse of the Heart.
John,
that's how old Stoltzfus is.
John, my question is this. Is this just, Chair Powell, King Dove, dragging the committee members along with him, or do they really have their own opinion in this market? I mean, come on, get real here. I mean, isn't this just Powell?
I think they all have their own opinions, and if anything, the Bernanke legacy opens it up. So we got all this Fed speak, all these different opinions, but the general opinion seems to be data dependent, data improving. The 2% target is still elusive in terms of the headline number. But where we're headed to is a better situation because the Fed has been vigilant. It really has been, while remaining remarkably sensitive to its dual mandate and the effects both in terms of delay and the effects that it has on both jobs and borrowing costs.
Tape recorder's running, John Stoltzfus. Where are we 12 months from now? Frame out the stock market out 1 year.
Already, Tom, I usually prefer to do that in December because by then, and this year will be beyond the election. But I would suspect likely higher as long as we don't get what Barton Biggs in the old days would have called a bolt from the blue or a sock to the jaw. We'd have to think that things are just basically improving. If we can just keep it moderate growth with resilience in jobs and economic growth and corporate earnings, I think we're good to go as long as we avoid getting complacent, and as long as we can avoid having the bolt from the blue hit us. I think considerably higher and well beyond the 5,900 target, probably.
John, just how focused?
This year,
I'm curious, just how focused are you on what's going on outside of the U.S.? I mean, we've got other central bank meetings, Mexico, Switzerland, Sweden, Australia this week. Are you focused on any of that, or are they all just following the Fed?
Oh, most certainly. Well, we're globalists, and we take a look at the ECB and the problems they have within their multinational economy, the things that are occurring in post-Brexit UK, and what's going on in Asia around China, as well as Xi Jinping's regime. And what we do see is really a mix and match in some ways, but overall, a desire to bring rates down, but in some cases, It's just it's still a little bit too early, and
Right.
in other cases, maybe they're behind the curve a bit.
John Stoltzfus, quickly here on Mag 7. What do you see?
I see the Mag 7 continuing to be have a good place on stage, but sharing the spotlight with other sectors. When it comes to artificial intelligence, it's already here. What comes in the future, all the Star Trek kind of stuff, I'm showing my age again, or the Star Wars, still showing my age again. But my point is, essentially, it's a reality today. It makes businesses more efficient. All 11 sectors, or the other 9 versus the communication services and information technology, are very well poised to benefit, and we believe have already benefited in the efficiencies that corporations have had to navigate relatively tough waters through the great financial crisis, and most recently the COVID situation, the supply chain disruption, and dealing with overstimulation of the economy, and now into a new world.
John, thank you. John Stoltzfus, optimistic. He is with Opto. Henrietta Treyz joins us now from Veda Partners. Henrietta, got a really serious, timely question. All sorts of pundits writing this morning that the vice president had a pretty good weekend versus what the former president's doing. Fine. But she has to make a switch. She's got a lot of fat cat supporters. She wants to do an economic plan, but will it be too progressive, too liberal for her fat cat supporters?
It doesn't look like they think that way with their pocketbooks. If I'm not mistaken, Kamala Harris's latest fundraising round with Wall Street folks was $27 million. So it seems like her adjustment, moving off of a 35% corporate tax rate and down to 28%, is much more palatable to those donors. The capital gains tax rate has dropped from 39.6% to 28%. So it seems to be working.
How about salt tax within the drive time here? This is Damian from north of New York writes in, how about that salt tax, Ms. Treyz? Can Vice President Harris get over to an elimination of this onerous tax in select blue states?
Well, I'd go a step further and say that the House Democratic Ways and Means Committee is already over it. I've been hearing from staff there for the last 6 months that they are very happy to repeal the $10,000 cap. They have been that way for quite some time. It's a $1.2 trillion revenue raiser, but if you can go after some other items and increase the deficit by, $1 trillion, $2 trillion, maybe 2.5, you don't need to do the salt cap going forward.
Okay, so Damian, you can go home now.
Yeah, no, I'm done. I'm done for the Henrietta. You really need to clear up for me these 7 swing states, namely Arizona, Georgia, Michigan, Pennsylvania, Wisconsin, North Carolina, Nevada. What theme should Harris be playing to? Is it going to be Roe v. Wade, national security? Is it inflation? Is it growth here in the U.S.? Is it taxes? What themes does she really need to hit on to appeal to those voters?
I would say first amongst equals is abortion. The gender divide in the polling data on all these swing states and nationally is really stark, and women make up 52% of the electorate. Kamala Harris polls way above Donald Trump on the issue of abortion, which is now the #1 issue for American voters that are female and second only to the economy in New York Times polling data. So that's probably #1. Immigration at the southern border has been reduced back to pre-2021 levels.
Interesting.
So it's not the same level of urgency in terms of severe numbers that we've seen in the past. And Trump has migrated the conversation over to things that have been verified as false, such as Haitians eating cats and dogs in Springfield, Ohio. So I think that's neutered the conversation without Harris having to really try very hard. On the economy as well, you have positive data sets that is reducing the amount of urgency that independent voters feel about the economy right now.
Well, Henrietta, it's UN week here in New York, so I have to ask you about national security as well. Where does that stack up? I mean, where does Israel stack up? Where does Ukraine stack up relative to the rest?
Almost nowhere. I mean, American voters just do not follow foreign policy the way that they follow other domestic issues. That's a perennial problem. There are voters in Michigan and Wisconsin who will follow this issue closely. But look at how many voters are in the third party base right now. It's down to 2% Jill Stein voters, for example, in states like North Carolina and Wisconsin. that is your sort of outrage vote around Israel-Palestine, and it's just not present at this time.
I look, Henrietta, at where we are, and Greg Villiers, with his wonderful AGF note, really emphasizes this morning that the percolation state to state is about nothing but abortion. Do you agree with that as the key debate?
I think it's the key debate. Indeed, what I find really valuable to speak with investors about this who may not have it on top of their radar is to think about what happened in 2022. We had 9% inflation, surging migration at the U.S. border. Abbott was sending migrants to Martha's Vineyard, and Republicans still got walloped in the House and Senate. That's all the message you need. When female voters are thoroughly galvanized across the nation, which is what we're seeing from voter registration data, fundraising data, the urgency that Democrats and independents feel to vote, Democrats in particular, is comparable only to the 2008 Obama week. And then one more thing I'd add is that Harris's surge in favorability is comparable only to Bush's post 9/11 surge in his favor.
Yeah.
So there's a lot of movement there.
Cook Political Report. Here's what they got as toss-up. Arizona 11th, Georgia 16th, Michigan 15th, Nevada 6th, North Carolina 16th, Pennsylvania 19th, Wisconsin 10th. Do you have polling in those districts on this key issue of abortion?
Yes, there's polling. It's very limited, though. House polling data in particular is really difficult to pull off. The economy is always going to be number one. But the issue there, as we've seen for the last couple months now, is that that's really sort of a partisan lean. If you're a Republican, you think the economy is terrible. If you're a Democrat, you think it's fine. The issue is really independent and suburban voters who are trending in favor of Kamala Harris by anywhere between 8 and 13 points right now, including in a lot of those swing districts. And that's what we're watching. I think a key piece to watch is the potential scenario where Donald Trump wins the election and Republicans win the Senate, which is my expectation with 90% odds, but Democrats pick up the House. That's something that I talked about with investors a lot on the road last week. I think the odds are rising. It's because Democrats have so much money to spend down ballot that they can bolster and expand the map in these critical House races.
Henrietta, just talk to us about the timeline here as we get into the election in early November. Like what data points are you most looking at? I mean, is it going to be the payroll print in the first week of October? I mean, no more debates. I mean, what dates really stand out to you as we kind of head in over the next 30 days?
Man, I wish it was the payroll data. I just don't see that transcending to the American voter. You know, there's anywhere between 4 and 11% of the electorate that's undecided right now.
The Fed meeting,
and
maybe.
I think that you hear from the Kamala Harris campaign is that they're looking for millions of eyeballs at a time. So that means they're looking to do it. And Trump is also looking to do a 60 Minutes interview in late October, potentially eyeing an October 25th debate between Trump and Harris. And then, of course, the October 1st debate between Vance and Waltz is really the next thing.
Just out moments ago, New York Times Siena, I believe this is moments ago, Trump leads Harris 50 to 45% in Arizona. When you see a poll like that, Henrietta, we're all benumbed by it. I mean, it's like, you know, it's just too much. Does that poll have veracity to you, plus or minus all the statistical noise?
I think the New York Times polling data is extraordinary. I mean, they're calling 250,000 people, or no, 150,000 people, 5,000 phone calls just to get folks on the line to answer these calls. But to illustrate how difficult the polling data is, the Arizona example you use is perfect. Before the debate, it was Kamala Harris +5. And now after the debate, it's Trump +5. This is an extraordinarily difficult science. I think it's important to take the averages. Harris has work to do in Arizona is the bottom line.
Thank you. I'm sorry, Henrietta. My answer is to ignore them all. Henrietta Treyz, we do not ignore. She's the Veda Partners and just brilliant here. And the front page is a Lisa Mateo hour. Lisa, what do you have?
Okay, so we know the NFL played its first regular season game in Brazil, right, earlier this month. You had the Eagles and the Green Bay Packers. It was September 6th, but this weekend, the Journal actually had a write-up where they spoke with fans and they tried to get reaction from it because this is huge soccer country, right? Okay, so a lot of people there, they described the game as this confusing, slow-moving match by men dressed as astronauts. They didn't really kind of understand it, but the fans were excited. I mean, they turned up about 10 hours before kickoff. Yeah. So that was some of the things they did.
Is the London football worked?
Well, it certainly has. And for all our listeners down in Sao Paulo and Rio, I will be in town from the 12th to the 18th of October. So if you need any help learning how to enjoy the game of American football, I will be there. I will be on hand. And look, it's not all about Gisele Bündchen and Tom Brady anymore, right? There's bigger issues at large here. Can't wait to get down there and visit our friends.
What's a bigger issue at
Taylor
large?
Swift is the bigger issue.
Taylor Swift.
Bruno Mars. Bruno Mars is coming down to Sao Paulo. No, but it's the bigger issue is the New York Jets. The New York Jets look great, and for our friends in Brazil, we like to wear green. I know they're not the Corinthians.
Yeah, I get it. Okay, next. When are you going to be in Brazil?
12th to the 18th.
12th to the 18th.
My mom's going to come with me also. She's going to come to some client
road
meetings.
Trip.
Yeah.
Mrs. Sassauer is aware of this.
My mother, she's 70-something years old. We're going to get her on a plane. We're going to get her down there. She's never been. Should be fun.
Excellent. Okay. You're a little mama's
Save
boy.
us,
I love
Lisa.
it.
Next.
Okay, we've been talking about the commute in the city, right? Nightmare this week. The best city for commuters. Wall Street Journal came out with it. So it asked people, what's more important to you when it comes to commute? Is it time or cost? Think about it. What's more important? So a lot of people said it's their time that counts more. Columbus, Ohio, Memphis, Tennessee, Milwaukee, some of the fastest commutes, about 22 minutes one way. That's what it takes. Fort Worth, Texas, Detroit average about 27 miles an hour. But some cities have a lot of faster routes. They say it's just the well-run public transit system.
Does everybody understand I'm hardwired that you have the worst commute of the year every day? Because we find, folks, a correlation of our glorious ratings to length of commute is tangible.
I think we can't ignore the fact there's going to be a lot more listeners on Apple CarPlay for us today because UN Week is a nightmare for commuters here in the city of New York. And unfortunately, I drove in today, so it's going to be a long trip.
You got to take the train.
I know. It's too early. The trains don't run that early.
My record, folks, and this was to go to an international relations meeting at Michael's restaurant over, Center West Side. I had to take 3 cabs once. You take the cab, you're stuck. You pay the cab, you get out, you walk 2 blocks, get another cab, go, and it was just...
Who are the worst commutes? Forget about the best. Who are the worst commutes? It's got to be New York, right?
Yeah, I was about to say New York City.
Next, what do you got?
Okay, so we were talking about tech jobs not too long ago, but they're saying millennials are even getting too old to land those tech jobs. Tech workers under 25 becoming more common. The proportion of workers older than 40 is shrinking, so they're looking for that younger worker.
Why? Is there a why?
14 years old?
They're saying they're just more adverse to everything that's going on, right, about AI. They're just saying the younger generation is a little bit more in tune with tech than the older generation, but we shall see.
My brother, who's done better than me, is a mentor to young techie types.
Okay.
And it's sort of like my book of the summer, Chip Wars. There's no institutional understanding of how Taiwan Semiconductor or Intel happened. And my brother's employed as a fossil to help the young crew that you're talking about. They don't know what COBOL is or Fortran.
Well, I can say this. I may be 50 years old, but my artificial intelligence bot looks like he's 19, sounds like he's 19. He is a stud, and I think he can get a job working for some big tech.
You have a bot at home?
You don't have a bot? Of course you do. You haven't been machine learning a bot all this time? Like your own little personal Jarvis that talks to you and takes out the garbage and does all the things you need, orders your coffee for you, coffee and water, as you will?
Do you have Alexa?
I do have Alexa. Everyone has Alexa.
You're making me sick.
Everyone has Alexa, of course.
I don't have Alexa.
It's on your phones, guys. Everyone has Alexa. I mean, I don't use it, but
I had Alexa for 3 days. I opened the door and there's 4 bags of Purina dog chow. And vet bills ordering this stuff.
I got to tell you guys, you should watch out for this scam. We have been getting all these deliveries from Amazon, right? And we like, where'd they come from? Where they're not showing up on our orders. We were told that those are people who are ordering stuff so that when you scan the QS code to return it, it gets all your information off your phone. So I guess the dirty little secret is if you have all this stuff coming in from Amazon that you didn't order, just take it and use it because you can't return it. Isn't that wild?
One more, Lisa.
Anyway, sorry.
No. Oktoberfest kicked off in Germany, okay? But the Associated Press, they said the world's oldest brewery, they spoke with it. A lot more people are going for non-alcoholic beers. That's the new trend at Octoberfest. All but two of the large 18 tents of that festival offer the drink. It's a 16-day celebration, but here's the thing. It's not cheaper. It's the same price as the regular priced beer, but you just won't get the hangover. But it's the first time that an alcohol-free beer garden opened in Munich. So Oktoberfest starting to trend.
Have you ever been to the Hofbräuhaus in
It's
Munich?
un-American.
The beer hall,
I've been to the
Hofbräuhaus?
Hofbräuhaus in New York.
Well, there's one in
I don't
Munich,
have
the
your
original.
life.
Or the Augustiner Brau in Vienna. Let me tell you, in Salzburg, sorry. Let me tell you something about these beer houses. There's dark and there's light. There's no alcohol free there. So, I'm going to cast shade on that story. I mean, who is drinking alcohol free beer for lunch? I mean, when you can have a, nice Coca-Cola or something sweet.
I did see an article in the Zeitgeist where they're trying to shrink the size of the glass in British pubs. They're trying to make
the price
serve
shrinking?
you like a schooner. Yeah, exactly. But
Apparently, Tim Stanley likes alcohol free beer.
We say thank you to Lisa Mateo for the newspapers. This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.